Hello and welcome. You're watching Market Fatafat on ET now with Vinny Motiwala and I am Snehi Shah. Good afternoon, Vinny. And let's take a look at what the markets are doing. Doesn't seem to be a good afternoon for the markets coming in as of now because you have Nifty trading lower by 0.6%. Sensex also down 0.7%. So, we had some gains yesterday, but we seem to have reversed all of those in today's trading session. Nifty did see quite some recovery coming in, but seems to have tapered down once again. You have Nifty Bank also largely under pressure, 0.8% low. India Wix, yet another spike coming in of 4% today on that index as well. Now let's talk about the broader markets. They seem to be underperforming even the benchmarks, even though the benchmarks are lagging today. Nifty mid cap is trading lower by 0.7%. You have Nifty small cap that is ailing the entire market and underperforming all of its peer indices. 1% lower is where the small cap index is as of now. Let's take a look at what the sectors are up to, and barring FMCG, you have all the sectors right now that are trading in the red. FMCG also right now held by Godrej Consumers, Marico, Britannia, Colgate Palmolive, all of these stocks holding FMCG in the green. But other than that, you have Nifty Metal on the flip side that is lagging behind the most. 1.8% cut coming in on that index because of SAIL, LMDC, Nalco, Hindalco. Then you have Auto in the red. You have, of course, M&M and Maruti that are lagging today. Where you have Nifty Media, PSU Bank, IT, Realty. All of these indices are down in the red. But Winnie, seems to be a rather tempered trading session today.
Absolutely, a tempered trading day because we've seen that run-up coming in the last few trading sessions. Yes. So it's new highs. But let's get started with all the stocks that are buzzing in trade on the back of news flows and technicals. And on the technicals, we have Aamar Singh joining in with us. While from the research team today, we have Ankita as well as Ashesha joining in with us. A very good afternoon to all three of y'all. Now let's move on and let me start with the first stock that we are talking about today. We have GMDC that we're keeping on our radar today. Why? GMDC, now there is an amendment of a power purchase agreement with between GMDC's Akrimota Thermal Power Station and GUVNL. Now over here, what we also understand is that GREC has recently actually approved the crucial amendments that will be coming in, and this is on the amendments of the purchasing agreement that is there of GMDC in principle approval of a one-time provisional capital expenditure that is going to be of around 293 crores. So today, yes, was trading much higher but managing to hold on to gains of almost 2% in trade even as of now, Snehi.
Alright, well, let's move on, talk about one of the biggest losers on the street today, and that is M&M. Now, M&M is a stock that has been tanking away in today's trading session because they've announced a price cut for their top XUV 700 variant, and M&M has reduced the price of this variant to 19.5 lakhs versus 21.4 lakh rupees earlier. The AXL and AX7L trims are 50 to 60% of the 6,000 to 8,000 rupees per month volume as well. And this price cut is only for 4 months as a celebratory offer. As of now, but the street is not taking this price cut very well because the stock is down 7% as we speak. These prices have been cut to respond to the higher discount offered by peers. Remember, yesterday we also had Tata Motors that was in news because they went ahead and slashed prices of Harrier and another variant as well. And in April, the top variants of XUV 700 had a waiting period of roughly 1.5 months. Now, analysts believe that these price cuts can impact the EBITDA by 2 to 3% on an annual basis. So that's quite an impact coming in on the company's financials, and cut affect EBITDA by rupees 30 to 35 crore per month for 4 months is what the analysts are predicting in, and this is what they have cut the EBITDA estimates to be. So, well, 7% lower is where M&M is one of the top losers today.
Okay, let's move on and talk about a stock that's buzzing away in trade in the last 1 year, specifically moved from 200 levels to 631. And on the technicals, Amar, what's the word for REC? Should one now start booking profits?
Yeah, looking at, if I look at REC, REC still continues to be in a strong uptrend. We did witness the stock consolidate from almost 600 levels to as 450. But again, the stock has bounced back and currently trading around the 630 mark. If you look at the long-term charts, continue to remain strong and positive. Intermediate-term trend, yeah, we are seeing some sort of consolidation there. But again, on the short-term charts, the trend is now...
Snap the line with Amar. We'll reconnect with him in terms of what is his view coming in on REC again. But let's just go to the next stock right now. And Ankita, RVNL again in focus, more order wins?
RVNL is in focus today. In fact, it's trading with gains of over 9%. It is because the company has emerged as the lowest bidder L1 for SER HQ Electrical South Eastern Railway, and the work order is worth 202 crores to be executed over a period of 18 months. Now, they've also signed an MOU with Tatweer Middle East and Africa LLC for developing joint capabilities in design and execution of various rail-based work in the MENA region and the European countries. Also, they have bagged an LOA from the Maharashtra Metro Rail Corporation Limited for Nagpur Metro for a project which is worth 187 crores, and this is likely to be executed over a period of 30 months. So on the back of these order wins, RVNL is in focus, trading with gains of over 9%.
All right, so multiple order wins coming in for RVNL today, keeping the stock in focus. But let's move on. Ashesha, you've picked out delivery for us. Tell us why this has made it to your list.
This is on account of a block deal that took place today morning. The stock is down over 0.5%. Nearly 3.2% equity changed hands via block deals that took place today morning, and Canada Pension Fund is the most likely seller. It sold about 3.2% stake, which is valued at 885 crores. Remember, they had earlier this year in the month of April sold about 2.8% stake in the company at a little over 900 crores. So this is the second stake sale in the company that they've done over a period of 3 to 4 months, and they've most likely fully exited the company. So on account of this block deal that took place, Canada Pension Fund being the most likely seller, the stock is in focus 0.6% lower in trade as we speak.
So that is why delivery is in focus today on the back of a block deal. But let's focus, talk about one player from the real estate space, and that's a Marathon Realty. Let's talk about why the stock is in focus. It's on the back of its Q1 updates coming in. Slightly weakish updates coming in from this stock because area sold has seen a decrease of 21% sequentially. And even when you take a look at the pre-sales in terms of value, they've done pre-sales of 214 crores compared to 398 crores this time last year, which is a steep decline of 46% on a year-on-year basis. And collections have also gone down at 272 crores this time versus 233 crores this time last year, which is a drop of 17% coming in. On the flip side, when you take a look at their debt picture, overall debt is at 728 crores, which is largely in line with the company's objective to bring their debt to a healthy level. But well, yes, on the back of these slightly weakish numbers coming in, a 46% drop in pre-sales, 17% drop coming in collections, 17% rise coming in collections. It's the pre-sales number that is ailing this stock, and as of now 4.7% lower is where the stock is.
Let's move on to the next stock that at one point of time in the day was at a 52-week high. Ankita, that's Lloyd Metals. What's the word on this one? What's the news flow?
Yeah, Lloyd Metals' share of the company had opened higher. In fact, it had touched its 52-week high, and it soon fell prey to its profit booking soon after that, and it slipped into the red. It's back again. It's trading flat right now, but it has come up from those losses. But this comes after the company has announced that it's raised its 1,200 crore through qualified institutional placement (QIP). Now, the company has issued 1.75 crore shares through the fundraise, and they're offering them at 696 rupees each, implying that 4.93% discount to the QIP floor price of 732 rupees per share. Now, Quant Mutual Fund acquired nearly 30% of the total share offered in the QIP, and the other major investors included Shamyak Investment, Autumn Investment, and Infrastructure. The company has also stated that it plans to utilize the proceeds from the fundraise to establish a 4 MTPA pellet plant in Kunsari in Maharashtra. Now, this includes setting up of an iron ore and grinding unit to produce blast furnace and DRI grade pellets, aligning with its strategy for forward integration. And additionally, the company's board has also proposed issuing a 4 crore convertible warrants at 740 rupees each on preferential basis, and that's subjected to shareholders' approval in the upcoming EGM, which is scheduled for 29th of July.
He also interacted with the management of Lloyds Metals, Bala Subramanian Prabhakaran, the MD at Lloyd Metals and Energy. He shared the fund utilization plans from the latest QIP. He also shared his outlook on iron ore prices. Listen to what he had to say.
With this raising, we wanted to go into 2 into 4 million ton pellet plant. And with our internal accrual, we are also building up a slurry pipeline. The entire proceeds will go towards getting up a pellet plant, for which we have already the required land and the clearances. This proceeds will be entirely used for the purpose of building up the pellet plant. With the monsoon coming in, there is always a supply gap which comes in. especially Orissa, Jharkhand, Chhattisgarh, and now Maharashtra. These are the 4 areas. So we believe that the price might be very robust because it's not only, let's not talk about Japan on the global market. We'll be more concentrated on the domestic sale of iron ore. So definitely with the coal prices softening, people will like to use the better grade of iron ore. So we believe that there will be a premium given to us because of the grade what we produce, like how 61, 62, we maintain 63 plus with less alumina silica. So we believe that the prices might be very stable. And monsoon is going to, we have to wait into the monsoon because monsoon affects the production in all the mines. So there also has to be a demand supply on the supply of iron ore coming in the monsoon season.
Okay, on that note, we're going to slip into a very short break. Don't go anywhere. More stocks after this break.
Hi there, welcome back. Still watching Market Fatafat on ET Now. Thanks so much for staying tuned. We have Aamar back with us on the technicals. And Aamar, you've taken Jyoti Labs, you've picked that stock out for our viewers. Tell us why you're flagging this stock off on the technicals and what are the charts looking like to you?
Yeah, so looking at Jyoti Labs, what we are seeing is that the stock was in for consolidation between the 400 and the 470, 480 levels, because earlier the stock was unable to reach the 475, 480 levels. So that level has been taken out and the stock is now inching towards the 500 mark. And if you look at the stock from a long-term perspective, long-term on the monthly charts, the stock continues to be positive. Even on the intermediate term trend, that is on the weekly charts, the stock has turned positive. So important for the stock is to sustain above the 470, 480 level. That's something which is important and crucial. Sustaining above that level, the stock has the potential to rally. Once it starts sustaining of the 500 mark, the stock has a potential to rally towards its all-time highs, which was almost 554. So a 10% rally could not be ruled out if the stock sustains above the 500 mark. And also what we are seeing is for the last few trading sessions when the stock really took off, that is from 28th of June, the volumes have been significantly higher. So this is one stock one can keep a close watch on.
Okay, can keep a close eye on Jyoti Labs. Let's move on to the next stock. And Ashesha, Pidilite is the stock that you've picked out for us. What's the news flow here today?
Well, yeah, some important management commentary that has come in. Nuvama met with the management, and as far as their core business is concerned, the management's outlook continues to remain very positive. So the management says that core category will continue to do well over the medium term. Company is already amongst the top 2 players in the tiles and stone solutions market, and they say that the company derives nearly 39% of their monthly business from the app, and sales from online channels have also risen manifold over the last few quarters. They say general elections may have caused some temporary disruption as far as volumes are concerned in the first quarter of FY25, but their outlook with respect to core business continues to remain very positive. So on the back of this report that has come in, the stock is gaining nearly 1%. Very strong management commentary.
Commentary from Pidilite. Let's move on then and go back to Aamar. Aamar, you were cut off while you were in the middle of discussing REC. Would you like to go back to that stock, revisit that stock on the technicals and tell us what levels you are spotting? Because just in the last 6 months, the stock has rallied almost 50%. So what's your view going ahead?
Had a dream rally, if you say the last 2 years have been phenomenal. The stock is up by almost 6x. And going by the structure of the charts on the long-term charts, the trend remains very strong. Even on the intermediate term trend, we've seen some pullback happening. And earlier, the resistance or the all-time high, which was around 607, 608, so that has been taken out, and that also on significantly decent volumes over the last 8 to 10 trading sessions. And also what we are seeing is that the stock is now taking off one of the technical indicators, which was clearly pointing towards consolidation. Now that's inching towards a very crucial and important zone. So once the stock starts sustaining above the 600, 610 levels, currently it's around 630. So that clearly shows that there is more momentum and strength in the stock. So the stock has the potential to rally towards 650, 660 levels. On the downside, now the stock has got good support coming below the 590 levels. So these are the levels one needs to watch out for. This is a stock on a buy on any correction, and one can look at the stock.
Right, surely keeping an eye out on REC. Let's move on and talk about Paytm then, and we're keeping an eye on Paytm. Why? Now, last evening what came in was that the government panels had approved Paytm's investment in its Paytm arm, Paytm Payment Services Limited, and this would be a key step for Paytm Payment Service Limited now as a payment aggregator license journey. This was according to what reports came in yesterday. Now today what we also had was a note that came in from Bernstein that while the business benefits from receiving payment aggregator license would be limited, at least in the near term, a payment aggregator license is what they are watching out for. If awarded, would be a significant positive development that it would mark for the first positive action from the regulator after a series of restrictions that we've seen coming in for Paytm's business. So yes, that's the one that we're keeping an eye out on if this actually goes through. As of now, it was report. But even Bernstein said near term we may not see the benefit. Long term surely is an interesting one that we're keeping an eye out on.
Absolutely. So Paytm holding up pretty well in an otherwise somber market today. But Amar, you've picked out Paytm on the technicals as well. What are you spotting on this stock? Do you believe that the series of bad news for this event is now in the past and we could see some reversal coming in the stock price?
Yeah, actually, Paytm has, I would say, been a stock which really has. We've seen the markets trading at record highs and this stock trading at record lows, but the stock has pulled back and currently trading around the 470 odd levels. And if you look at the stock from a long-term perspective, yes, we could say that the worst is over. From an intermediate-term perspective, we've seen the stock bounce back. So the level to watch out for, I would say, somewhere around current levels, 470, 480. That's a very crucial zone of resistance for the stock. If the stock is able to sustain above the 480 levels on a consistent basis and sustains above that level, then we could witness a 8 to 10% rally in the stock towards 530 odd levels. So this is one stock one should definitely keep a close watch on. And also what we witnessed is that the volumes have been fairly, I would say, better than average over the last 20 days. So that also reflects that there could be more upside to the stock once it sustains above the 480 levels. So this is one stock one can keep a close watch on.
Right, an 8 to 10% rally is what Aamar is penciling in for Paytm. Let's move on then, talk about a stock that's holding up pretty smartly today, and that is KIMS. Now, Krishna Institute of Medical Sciences, they've informed the stock exchanges in a filing last evening that the company has entered into a share purchase agreement to acquire 100% equity share of the Chalasani Hospitals Private Limited, which owns the Visakhapatnam-based Queen's NRI Hospital. Now, KIMS will invest up to 75 crore rupees to acquire full stake of this QNRI hospital. This is what the company has stated, and remember, this hospital is a 200-bed hospital, and with this is now KIMS' second hospital in Visakhapatnam with an overall capacity of 630 beds in Visakhapatnam. So this is where the company is looking to expand, and on the back of this, they've gone ahead and acquired this hospital, and on the back of that news flow, stock is holding up 2.6% as we speak.
Okay, let's move on and talk about HDFC Life on the technicals then. And Aamar, what's the view that you have on HDFC Life? What is the level that you are keeping an eye out on? Because when you're looking at it in the last 6 months, the stock has not done anything interesting, right? So now time that we could see some bit of an up move?
You're right that the stock really hasn't delivered as per the investors, those who've been holding the stock. But now it seems that the stock is picking up steam, and we've seen that on the intermediate term trend, we are seeing some strong momentum building up. And if we go back, so in March of this year itself, the stock had made a high of close to 640, 642 levels. So now that's the zone of resistance for the stock. Seeing the current structure of the stock, it seems that level would be taken out. So you have to watch out for 640, 650. That's a crucial zone of resistance for the stock. Taking that out, then the stock would have a significant rally. That would, and the rally could extend towards the 690 levels, 700 levels. So this is one stock one should definitely keep a close watch on. Also, what we've seen is that on 13th of June, the stock witnessed significant volumes, and post that also the volumes have been quite high. So this is one stock one can keep a close watch on.
Surely keeping an eye out on that, but let's move on to an ET Now exclusive. Ola Electric may cut down the portion of the offer for sale in the upcoming IPO. That's the word that we are understanding. Anurag Joshi is bringing us these exclusive details. Anurag, take it away.
EV maker Ola Electric is mulling options, including lowering the quantity of shares to be tendered by the existing shareholders of the company in the upcoming IPO. The company is exploring various options, and these include reducing the size of the offer for sale to around 1,000 to 1,200 crore rupees from 1750 crore rupees that it is currently planning. If the plan is implemented, the overall size of the IPO of Ola Electric will reduce to around 6,500 crore rupees from 7,250 crore rupees that is currently planned. Ola Electric started in 2017 and it is promoted by Bhavish Agarwal. Besides the offer for sale, the company in the IPO is also planning 5,500 crore rupees of new share issuance. Now, Ola Electric had said in its DRHP that it is planning to use the proceeds to fund capex, which includes building a EV cell plant capacity to 6.4 gigabytes from 5 gigabytes. In December, the company had filed its DRHP with SEBI, and just last month, SEBI had approved the DRHP.
All right, thanks Anurag for all of those exclusive details coming in. A cut in the OFS of Ola Electric IPO is what sources are telling us to expect. But on that note, we'll take a short break before we keep it going with all the top buzzers here on Market Fatafat. We'll be right back.